Hey everybody, Courtney Smith here with our Wall Street winners. Well, it was a good Thanksgiving for our portfolio, and now I'm looking for the Santa Claus rally. All right, and there's nothing about Santa Claus here. Okay, all right, so what we have here is an ascending triangle formation. Of course, it isn't confirmed because it hasn't broken out yet, but I believe that it will. You've got a flat top, an ascending bottom, and volume is declining. So that's a classic definition of an ascending triangle formation. So look for it to break out this week. Okay, you got it? This week. And that would be another great sign that we're clearly in a good bull market here that we can make a lot of money in. Over here, we see three lines. The green line shows buying pressure. Red line shows selling pressure. So what we've seen is just consistent, relentless high buying, really for the whole month of November. And we've seen consistent low selling during the same period of time. Guess what? That's the definition of a bull market. In addition, the black line, which is the ADX, is confirming the bull market. So once again, lining up on the bull side, we've got to be long. NASDAQ breaking out to new all-time highs and a strong purple predictor. Am I getting excited? Damn straight I am. Seasonality, bullish, bullish, bullish. It's been working like a charm. Now what that means is we want to have at least a 50% larger position than we normally do. This is the season to make a ton o' money. Ton o' money. Utilities remain bullish. This is interesting. Take a look at the chart on the bottom. The Utes are still on a bull signal. Now, prices collapsed a week ago. They've been struggling higher this last week, but look at the purple predictor broke to new all-time highs. So I think the Utes are going to probably turn around and move right back up this week. Seasonality, you can see here, it's quite bullish this time of year. Maybe a little bit. Our top one, which is sitting president, that shows sideways action, but the other two are bullish. I'm going to probably bias it to say we should see bullish action this week. Asset allocation, that's a long bull market, bullish. Stock market RISKDICATOR has just taken off and moved to a new all-time high, showing that the market is throwing caution to the wind and they're ready to buy, and then buy some more. Global shares are even stronger than U.S. shares. I gotta give me some of this. Yield curve, pretty stable. Nothing really going on here. Bonds down early last week and then closed a little bit strong, but the purple predictor is starting to collapse. So I think this week will probably head lower. Now, let's stop for a second here. The green line is yields. That's down at the bottom. And I've been pounding the table for a long time that we're going to see higher yields, lower bond prices. Let's take a look at our four indicators, and let's start at the top and work our way down. The top line is gold, and you can see it's collapsing. Now, it was in a bull market, and yields lag behind gold. So gold, because of the big bull market we had, could be seeing still more strength in the yields, i.e. higher yields. But boy, that's a pretty bad looking chart for gold. The next chart down, the red and black lines, that's a bull market in commodity prices. So commodity prices are going up, but gold is going down. That doesn't happen that often, but there it is. The blue line is 10-year treasuries in Germany, which is the biggest competition for bonds. And after being suggestive of higher interest rates, now it's kind of neutral at this point. So our charts, which had been saying higher, are now more of a mixed bag. Dollar just barely above the lows there. That would be that breakdown below September's lows would be a big blow to the dollar, but would be fantastic for emerging markets. Okay, so it can be bad for one sector and good for another. That's the great thing about the stock market. There's always a bull market, and if there's no bull market in the stock market, it's always a bull market in cash. So we should always be cheerful. Okay, now gold broke major lows again. And this is a terrible chart, a terrible chart. And the interesting thing is, every one of my indicators are bullish, every single one. Yet gold is breaking down. Now, if all the news is bullish and the price breaks down, that is super bearish, super bearish. So I've been talking, I haven't been long gold for a long time, but this is bad. We cannot be even thinking at all of being long gold. Our gold key indicators, you can see these are all up, all bullish, and yet gold is breaking down. That's unheard of. That tells me gold is in a deep bear market. I really should be thinking about getting short gold, not long. Crude oil popped up farther than I thought. So they are really looking forward to a stronger economy. The oil market is seeing signs of stronger demand. Supply is stable. We're not seeing an increase or decrease in supply. So what they're seeing is a big increase in demand. I'm a bit surprised. I don't want to follow it to the upside, but we have to respect it. Bitcoin finally had a sell-off. We told you to get long around 12,000, and definitely when we broke above the highs there at about 12,500. So you've made huge amounts of money on this. I, unfortunately, personally did not get long. Okay, so do as I say, not as I do. But anyway, nonetheless, it's still a bull market. Even with the sharp correction, you got to be long Bitcoin. All right, everybody, thank you, freebies, for coming up here. Fully paid up members, hang on just a second. I've got a lot of new trades, a lot of very interesting new trades.